In this chapter, we will cover IRDA, formation of IRDA, functions of IRDA, then which laws are applicable to insurance in India. Many laws are applicable to insurance in India, directly or indirectly. Some are controlling insurance directly, some are controlling indirectly. So we will try to summarize which laws are applicable. Then we will see functions of insurance councils in detail. In first chapter we saw that existence of insurance council, and they are formed under Insurance Act 1938 as part of Insurance Association of India. I.R.D.A. Insurance Regulatory and Development Authority was formed by Government of India by passing I.R.D.A. Act in 1999. Prior to that, I.R.D.A. was working as a temporary body. It got legal recognition only in 1999. Precisely on 31st December 1999, Act was formed and actual working started under the Act only from the 2000. So some people say it is I.R.D.A. Act 2000, some say it is I.R.D.A. Act 1999, but the Act was promulgated in 1999, 31st December. So both days are more or less workable. Now main function of I.R.D.A. was to replace Controller of Insurance. It was body formed under Insurance Act 1938. Its function was to control insurance, working of insurance sector. It was a small body, not having many powers, some limited powers like licensing of surveyors, licensing of insurance agents, and that time brokers were not there, TPS were not there. So that role was not assigned to control of insurance. But on formation of I.R.D.A., control of insurance insurance functions were transferred to I.R.D.A., and as on today you can say more or less control of insurance is replaced by I.R.D.A. I.R.D.A. is not a person, it is a body of persons formed under I.R.D.A. Act 1999. In statute books, control of insurance is still there. So the provision is wherever I.R.D.A. becomes defunct or unoperative, Government of India can appoint controller of insurance to look after functions of I.R.D.A. So as a body, it is still there under Insurance Act 1938, but not actively operative. I.R.D.A. is a national agency working for Government of India for insurance industry. The main objectives of I.R.D.A. is to work for policyholders' protection interest. It is to look after interest of policy holders, and for that it has formed many regulations, either directly related to policyholders' protection or indirectly in form of controlling working of insurance companies, working of agents, working of brokers, and so forth. It also has to see that it looks after orderly growth of insurance in India, because penetration of insurance in India is very low, and this is formed to see that penetration of insurance in India increases, particularly in rural and social sectors. For that also we will see subsequently I.R.D.A. forms many regulations which are making obligatory for insurance companies to have minimum working in rural and social sectors. Subsequently, micro-insurance sector has also come into being, and for that I.R.D.A. also framed certain regulations. Secondly, it has to do the function of supervision of insurance industry, to see that the industry works in proper manner, so that we can say that function of Government of India of supervision, development, etc. is transferred to I.R.D.A. So it works at Agency for Government of India. I.R.D.A., as we saw, is a body, it is not a single person. So it is having a chairperson called Chairman of I.R.D.A. It is appointed by Government of India. Then it is having 5 whole-time members. At present, they are maximum. In future, number can be increased depending upon the need. Then maximum 4 part-time members. These members are appointed by Central Government of India from finance and related fields, and at least one person each from life sector, one from non-life sector. Full-time members should be from non-time member, life member, actuary, one from finance and one from investment. Non-life member may not be from any of these sectors. As we saw, that purpose of forming I.R.D.A. was to protect interest of policyholders and promote orderly growth of insurance industry in India. Thirdly, it is also to see that the insurance industry and people connected therewith work with integrity, work with financial soundness, customers are given fair dealings, and at all levels competence is there. Though competition is allowed, it is allowed along with competence. Then it also has to see that correct information is passed on to the customers and not false promises are given, and whatever promises are given, those are met with when the time arises in form of insurance claims. The authorities also conducted with prevention of frauds and also redressal of grievances of customers who are taking insurance policies from insurance companies. It has formed few mechanisms. We will see that later. Then insurance companies are, as we saw earlier, also connected with investment of funds. So I.R.D.A. also is to see that healthy financial market is developed for investments, and proper investments are made by insurance companies in proper fields allowed by I.R.D.A. And as and when the need arises, I.R.D.A. can issue directions and take appropriate steps to control working of insurance sector in India. Duties and functions of I.R.D.A. The important function of I.R.D.A. is licensing. It gives license to insurers and intermediaries who are allowed to operate in India. No insurance company can work in India without obtaining license from I.R.D.A. And for that, I.R.D.A. has formed regulations. Similarly, intermediaries who are working as channel between or conduit between insurance companies and customer are also to be regulated, and they are also to be licensed. So whichever intermediaries are working in India, they should have license from I.R.D.A. either directly or through agencies appointed by I.R.D.A. Agencies are insurance companies who are working on behalf of I.R.D.A. The second important duty of I.R.D.A. is to take care of policyholders' interest. For that, I.R.D.A. has formed separate regulation. Those regulations we will see slightly later on. Then it has to form code of conduct for intermediaries working in Indian market. The intermediaries are mainly agents, corporate agents, brokers, TPA and surveyors. I.R.D.A. has laid down different qualifications, either educational qualification, technical qualifications, training, sorry there is typing error, not trading but training of these intermediaries and licensing of these intermediaries. Then it has to take steps for efficient conduct of business through regulations, through directions and through guidelines. I.R.D.A. issues guidelines from time to time. Then I.R.D.A. also to, to see that these intermediaries become members of professional organization. For that, there is brokers association, and brokers are supposed to become member of this association. I.R.D.A. also encourages other intermediaries to form their association, and for that whatever help is required, that can be provided by I.R.D.A. and insurance companies. For the purpose, I.R.D.A. charges levying and fees on insurance companies and certain intermediaries like brokers. Then main function of I.R.D.A. is also to collect information from insurance companies so that it can take appropriate action for improvement of industry. It can collect information from intermediaries like brokers, etc. This information is collected either from the returns being filed by these agencies or by asking for information whenever need arises by I.R.D.A. Similarly, I.R.D.A. can investigate the working of insurance company and intermediaries and ask for information. It can order audit of insurers and intermediaries whenever need arises. Then wherever there are any disputes between insurers and intermediaries or intermediaries and intermediaries, I.R.D.A. will try to solve them. Other types of disputes to be solved through other mechanisms which are formed by either I.R.D.A. or available under different laws, like disputes about claims or dispute about payment of premiums. Those are the disputes to be solved through ombudsman, consumer forum, civil courts, etc. Then I.R.D.A. is also supposed to supervise Tariff Advisory Committee. Now, till recently, Tariff Advisory Committee was active in formation of various tariffs. But now tariffs are abolished, so TAC is not active as Tariff Formation Authority, but it is now data collecting agency. So whatever function they are doing working under I.R.D.A. Then as we saw earlier, one of the objectives of forming I.R.D.A. is to increase penetration of insurance in rural sector and social sectors. Sorry. For the purpose, I.R.D.A. has framed various regulations, and it has to see that insurance companies are meeting various targets framed by I.R.D.A. for achieving insurance of minimum percentage or minimum lives in these sectors. And other powers they can exercise as and when the need arises or they are granted by Government of India from time to time. Now we will see in brief insurance laws applicable either directly or indirectly to working for smooth functioning of insurance sector. We saw about Insurance Act. Other acts now we will see which are not connected directly. First is Motor Vehicle Act. This is mainly for and everything connected with operation of motor vehicle on Indian roads. But as far as we are concerned, it is having provision about third party liability to public, which may be in form of injuries, death or property damage. So Act provides for compensation to member of public where anybody is injured due to accidents happening on operation of motor vehicles at public space. Then under the Act there is provision of compulsory insurance of third party liability. There is provision of compulsory insurance of third party liability. So every vehicle operating on public place should be having compulsory insurance, and if it is not having insurance policy or certificate, then it is a punishable offence. Then for speedy disposal of compensation cases, there is formation of Motor Accident Claims Tribunal which exclusively looks after compensation cases under Motor Vehicle Act. Then Motor Vehicle Act also provides for structured formula for compensation to the victims of accidents on road. So, victim of road accident or legal rights of the victim are having two options, either to go through normal process provided under the law or go for structured formula where compensation is fixed on certain parameters like age, earning, number of members in family, etc. Then very important provision of MV Act is no fault liability, which provides for minimum compensation to victim of road accident. This is called no fault liability. In that case, victim will be given some compensation. In case of death, 50,000. In case of serious injury, 25,000. This is given on the basis of no fault means without proving negligence on the part of driver of the vehicle. There is no need of proving negligence, and even contributory negligence is not to be considered by the victim of the accident. If the victim wants to claim more compensation, it can apply to MSCT for higher compensation, and if higher compensation allowed on fault basis after proving negligence and other factors, then compensation given under no fault basis is to be adjusted against that. In case of identity of motor vehicle is not known and a vehicle which has caused the accident is not traceable, then there is provision under the law under hit and run provision, in which case some minimum compensation is paid of 25,000 for death and 12,500 for grievous injury. This to pay for such losses, a separate fund is created by contribution from General Insurance Corporation of India, India's companies, general insurance companies, central government and state government. The other law is Marine Insurance Act 1963, which defines the term marine insurance. As we saw that under Insurance Act also the term marine insurance is defined. So marine insurance is defined in Marine Insurance Act also. It is comprehensive law governing Marine Insurance Act, marine insurance theory and practice in India. So all parts of marine insurance in India are governed by the Marine Insurance Act 1963. It is based on English law of 1906. The next law applicable to transportation by sea is Carriage of Goods by Sea Act 1925. COXA. It is popularly known as COXA. COXA spells out ship owners' liability for operation of ships on water. Immunities means the circumstances under which they are not liable. For example, in case of fire or in case of storm, in case of collision, etc., if they are not at fault, the liability will not arise. So these are called immunities, which are available under certain circumstances. Then time limit of filing claim on ship owners for any liability and limitation of liability. The amount of liability is limited, which depends upon various factors, and mainly it is weight of the cargo which was carried and for which the freight was paid. Then Bill of Lading Act 1885. Bill of lading is a document of title to the goods. It is like receipt for cargo given by ship owner to the cargo owner when cargo is received by the ship owner for transportation by sea. It recognizes the transferability of bill of lading, so it makes it negotiable document. So in international trade, goods are not sold by actual physical delivery, but they are sold by transfer of documents, and bill of lading is title document. So instead of giving physical delivery of goods, delivery is given by transfer of bill of lading. Carriers Act 1865 is related to road transportation. It is applicable to public carrier. The liability of public carrier is unlimited in India, and very few immunities like riots or act of God like floods, earthquake, etc., or client's fault and not packing cargo, etc., properly. This act was amended and replaced by Carriage of Goods by Road Act 2007 and Carriage by Road Rules 2010. So presently, Carriage Act 1865 is not operative in India. It is replaced by Carriage by Road Act 2007. Railways Act 1989 governs the operation of railways in India, but as far as we are concerned with liability of railways for carriage of goods. Once again, liability of railways is limited. It is to be declared from time to time. Presently it is for 50 rupees per kg for general cargo. Similarly, there are time limits for filing claim on the railway, and railways claims can be handled only by Railways Claims Tribunal formed under the Act for various places. We are having Employees State Insurance Scheme under the Act ESIS 1948. It covers sickness, maternity benefits, employment-related injuries, and compensation for that. It is formed under ESIS Corporation. At various places, ESIS is having hospitals also. It is for industrial employees, and there is certain limits of ceiling, limits of salary for which the industrial workers are eligible. The fund is taken out of contribution from employer, employees, and the government. Another important applicable act for employees is Workmen's Compensation Act 1923, which governs the compensation for accidents and occupational diseases arising out of and in course of employment. The act is now replaced by Employees Compensation Act. It is wider in application. Now it governs non-workmen also, but there is limit of salary or wages up to which only compensation is available as per formula given under the law. Public Liability Insurance Act 1999 is provision for compulsory insurance for those concerns which are handling hazardous material. Hazardous material is defined under PLI rules 1993. Insurance is compulsory. If it is not taken, then it is punishable offence. There can be fine, and if for repeated offence is committed, then there can be imprisonment also. The liability is on no fault liability principle, and it is 25,000 in case of death per person. Medical expenses maximum is 12,500. Property damage 6,000 maximum. For grievous injury, it is also up to 25,000. Then we are having Reserve Bank of India regulations concerning foreign exchange for payment of premium and payment of claim. They are called LIM and GIM, General Insurance Memorandum and Life Insurance Memorandum. They lay down the regulations of payment of premium in whether it's foreign currency or Indian currency, to which citizens or which insures the premium can be accepted in Indian rupees in case of claims, in which currencies they are to be paid. In certain circumstances, prior approval of Reserve Bank of India or authorized agencies approved by RBI is required for payment of claims. So this was in brief about insurance laws applicable in India. Now we'll see General Insurance Councils. As we saw earlier, Insurance Association of India is formed under Insurance Act 1938. All Indian insurers were members and all foreign insurers were associate members. Now as foreign insurers are not there, all Indian insurance companies are member of Insurance Association of India. Under section 64C, there are life insurance councils and general insurance councils. Once again, all life insurance companies are members of life insurance councils and general insurers are members of general insurance councils. Both life and general insurance councils are working through executive committees, and these committees have two officers which are appointed by I.R.D.A. as chairman and member, 8 from members of Insurance Association of India, that means from insurance companies. 1 should be non-connected with insurance to be appointed by I.R.D.A. and 5 members connected with insurance to be appointed by I.R.D.A. So wherever I.R.D.A. feels that there is no proper representation from Insurance Association of India, it can appoint up to 5 members through their powers given under I.R.D.A. Act and Insurance Act. These councils may appoint committees for specific purposes, and if any vacancy which is arisen have not been filled up by councils, then I.R.D.A. can fill up those vacancies. The secretaries of both the councils, Life Insurance Council and General Insurance Council, should be appointed by I.R.D.A. Duration of councils is 3 years from the date of first meeting, and if it is not replaced by fresh councils, then old councils will continue till replaced by fresh councils, and till then whatever decisions they have taken are final and binding. Functions of these councils are to aid, advise and assist insurance companies, form code of conduct and sound business practices, advise I.R.D.A. on management expenses, how to control management expenses, inform I.R.D.A. about any irregularities observed by them, and any other ancillary matters for betterment of better working of insurance industry in India. Under section 64N, wherever there is common interest of life insurance sector or general insurance sector, both councils can work together. In chapter number 2, we saw how I.R.D.A. is formed, what is the composition of I.R.D.A., what was the purpose of formation of I.R.D.A., I.R.D.A.'s duties and functions, insurance laws in India which are affecting working of industry either directly or indirectly, Insurance Association of India and insurance councils, and functions of insurance councils. Thank you. We will deal with few questions and remaining we will deal at the end in last session. The question is whether TPA, third party administrator, is licensed. Yes, it is licensed. We will see more provisions in chapter number 3 which we are going to discuss now. Life insurance regulations we will see later when we come to regulations. Then 107 companies were merged into 4 public sector insurance non-life companies. So 107 companies were merged at the time of formation of non-life sector under General Insurance Business National Act 1972. It happened in 1972. The question is about Malhotra Committee. Malhotra Committee was formed by Government of India under chairmanship of Mr. Malhotra, who was once upon a time Government of Reserve Bank of India, and around 20 members were selected from different fields of finance and related fields, and also from insurance, also from consumer activism, and they prepared a report called Malhotra Committee report, which was submitted to Government of India, and after deliberation and discussion it was put before the Parliament, And in the year 1999, the act was passed called I.R.D.A. Act of 1999. We saw earlier it was passed on 31st December 1999. So I.R.D.A. was created under I.R.D. Act on 31st December 1999. We started working in year 2000. Broker and agent, whether they are same or different, both are different. Agent is a small entity, broker is supposed to be big entity. Theoretically, we will see the difference slightly later on. Remaining questions we will deal with in last session on question answer.